Hey everyone, I'm Charles Elwis, CPA and EA. For over 10 years, I've been tackling serious IRS tax debt cases. Alongside my team, consisting of ex-IRS agents, tax attorneys, and tax resolution experts, we boast over 250 years of combined experience. We help folks nationwide navigate tricky tax waters. Today, we're breaking down Trump's proposed 2025 tax cuts in plain and simple terms. What could these changes mean for you, your family, or your business? Stick around and let's dive in. Quick recap of previous tax cuts. Let's rewind to 2017 when President Trump introduced major tax changes. Lower taxes for most. The highest tax rate dropped from 39.6% to 37%, and standard deductions nearly doubled. Business relief. The corporate tax rate fell from 35% to 21%, and small business owners got a special deduction. But here's the catch. Many of these cuts are set to expire in 2025. If nothing changes, tax rates will go up and those extra deductions will disappear. What might Trump's 2025 tax cuts include? The new plan aims to extend some of these cuts and introduce a few new ones. Let's go through the main ideas. No taxes on tip income. If you work in restaurants or hospitality, your tips could become tax-free. This means more take-home pay if tips are a big part of your income. No taxes on Social Security benefits. Currently, retirees can be taxed on up to 85% of their Social Security. Under this proposal, you'd keep more of your benefits. Tax-free overtime pay, working extra hours. Those extra wages might become tax-free. This could benefit nurses, construction workers, and other hourly earners. Bigger child tax credit. The child tax credit could increase to $5,000 per child. A huge relief for families feeling the financial crunch. Lower corporate taxes. Corporate rates could drop from 21% to 20%, or even 15% for companies manufacturing in the U.S. This aims to bring jobs and production back home. How are they paying for these cuts? You might wonder, how does the government fund these cuts? One option is a tariff on imported goods, which is essentially a tax on products from other countries. Tariffs could range from 10% to 20%, possibly higher for certain nations. Proponents argue this brings money into the U.S. and reduces overseas spending. Critics, however, worry it might drive up prices on everyday items. This is the proposed trade-off for keeping taxes lower for American workers and businesses. What should you do now? Here's what to do next. Stay informed. Tax laws can change quickly, especially during election cycles. Assess your situation. Whether you're nearing retirement, earn tip-based income, or run a small business, these proposals could impact your tax planning. Seek expert help. If you need professional guidance or have an existing IRS issue, my team and I are here to help. No matter how these proposed cuts unfold, it's wise to stay ahead in the tax game. Got questions about your specific situation or dealing with tax debt? Email me at charleselwis.cpa or call me directly at 817-455-3485. I'm Charles Elwis, CPA and EA, and thanks for spending time with me today. Make sure to like and subscribe for more straightforward tax insights. Until next time, take care.